As of October 6, 2025, parts of the U.S. federal government have shut down, sending ripples of uncertainty through Washington and beyond. Lawmakers couldn't agree on a budget, so non-essential services are paused, and the political gridlock has left many Americans wondering what comes next. Federal employees are furloughed, national parks close, and local economies feel the strain as spending drops. Small businesses near government offices see fewer customers, and families brace for delayed paychecks. Yet, despite the chaos in the Capitol, the stock market barely flinched. The trading floor remains calm, and investors carry on as usual. The S&P 500 just hit a record high, and futures are up. Wall Street seems almost immune to the shutdown's immediate effects. Investors seem to believe this shutdown is just a temporary blip, not a threat to long-term profits. Many are betting that the government will eventually reopen and business will return to normal. The market's calm shows how investors weigh political drama against bigger forces like corporate earnings and global trade. They're focused on fundamentals, not just headlines. Even globally, markets are mostly steady. Japan's Nikkei surged, and there's no sign of panic in Europe or Asia. International investors are watching, but not overreacting. This resilience highlights that markets are driven by a complex web of expectations, not just headlines. Investors look at the bigger picture, weighing risks and opportunities. While shutdowns disrupt daily life, investors are betting on the bigger picture. They're confident that the economy's underlying strength will carry through. The real story is how markets can shrug off political turmoil, at least for now. But history shows that prolonged uncertainty can eventually take a toll. But beneath the surface, uncertainty is building. Some investors are growing cautious, watching for signs of deeper trouble. The shutdown is just one piece of a much larger economic puzzle. Other factors, like inflation, interest rates, and global events, are also shaping the outlook. Investors are watching closely, ready to react if the situation drags on or if new risks emerge. For now, the market remains steady, but everyone knows that can change in an instant. One overlooked consequence of a government shutdown is how it plunges the financial world into uncertainty almost overnight. Suddenly, the steady stream of economic data that markets and businesses rely on comes to a halt, creating a sudden blackout of information. Agencies like the Department of Labor stop releasing key reports: no jobs numbers, no inflation stats, no GDP updates. The usual signals that guide decisions simply disappear. Investors and policymakers are left flying blind, forced to make high-stakes decisions without the reliable information they depend on. This lack of data fuels wild speculation and anxiety, making markets more volatile and unpredictable than ever. Even the Federal Reserve, which sets interest rates and guides the economy, is left guessing, increasing the risk of costly policy mistakes. Without official numbers, everyone scrambles for clues, relying on guesswork, alternative data, and incomplete information to fill the void. The shutdown doesn't just pause government services, it casts a shadow over the future, making it harder for businesses and families to plan ahead. In this darkness, uncertainty becomes the only constant, and the entire economy is left searching for answers in the dark. Amid the uncertainty, two assets are shining: gold and Bitcoin. Gold, the ancient safe haven, is nearing $4,000 an ounce, a 50% jump this year. Bitcoin, once seen as speculative, is now trading above $123,000, close to its all-time high. Both are attracting investors seeking safety from political and economic turmoil. Gold offers tangible security. Bitcoin offers digital independence. Their parallel rise shows investors are diversifying what safe means in a modern world. The surge isn't just about fear, it's about finding alternatives outside traditional systems. In times of crisis, both old and new forms of value come to the forefront. Why gold and Bitcoin? These assets have captured the imagination of investors worldwide, sparking debates and headlines. They're not tied to any government or central bank, making them stand apart from traditional currencies and financial systems. With rising concerns about government debt and currency devaluation, assets with limited supply look more attractive. Gold can't be printed, it's mined, and its scarcity is part of its appeal. Bitcoin is capped at 21 million coins, a hard limit coded into its very foundation. Both serve as hedges against chaos and inflation, offering a sense of security when markets are volatile or unpredictable. For some, it's a psychological response, seeking stability when institutions seem shaky or trust in the system is eroding. For others, it's simple momentum. Prices are rising, and no one wants to miss out on the next big thing or be left behind. The crowd effect takes over, and buying begets more buying, fueling a cycle of excitement and speculation. In uncertain times, alternative assets become magnets for both fear and FOMO, drawing in cautious savers and risk-takers alike. Whether driven by deep conviction, a desire for safety, or just chasing returns, investors are piling in at record rates. The feedback loop is powerful and self-reinforcing, making alternative assets even more alluring in today's unpredictable world. Today's market is split between fear and greed. Record highs in the S&P 500 show optimism, investors betting on corporate growth despite political noise. Meanwhile, gold and Bitcoin's surge reveals deep anxiety about the system's stability. The stock market reflects confidence in companies. Alternative assets reflect doubt in governments. Both can be right. Profits can rise even as worries grow. The future depends on how long the shutdown lasts. A quick fix could calm nerves, but a prolonged crisis might push gold and Bitcoin even higher. We're witnessing a real-time test of what investors value most: growth or security.